All right, Albank Coin, Chess and Wine here. I wanted to do a video recap for the week ending Friday, October 1st, 2010. You can see on the right-hand side of this chart right now, this is the daily chart of the S&P 500, the SPX, that the market has been consolidating just below this key multi-year important price level of 1150. And the market's been consolidating just below it. Yesterday we tried to break out above it. That breakout failed. But at the same time, the bears really have been unable to turn this market around and roll it over. So what we've had over the past two full trading weeks here, you can see here after this Monday, September 20th gap up here, we've more or less just been going dead here in essentially a neutral range. Now, with that said about the neutral range, I think you'd be hard-pressed to deny the progress made by the bulls compared to earlier in the summer. First things first, the bulls conquered this key 1130 area, which turned us away at various points throughout the summer. And not only have we conquered the 1130 area, but the bulls indeed have held well above that 1130 area for the past 2 weeks. So I think that needs to be acknowledged. And beyond that, you can see that these moving averages are no longer acting as the proverbial brick wall as they did earlier in the summer. Instead, now we are operating above all the major moving averages and above a rising 20 and 50-day moving average, as well as seeing the longer-term moving averages here, the 100, the 200, and the 150-day moving average all start to flatten out, whereas again, throughout the course of the correction, which began in late April, these moving averages were acting as resistance while we rallied up into them from oversold conditions. So I think on the whole, again, the bulls have made a lot of progress, but then again, 1150 is acting as the next brick wall here. So I think we're still coming to terms with that level. Now, one idea that I've been discussing for roughly the past 2.5, 3 weeks is this idea that the leaders, especially in the technology sector, had become extremely extended. But just because those leaders were extended, like Apple, you go down the line, they were just screaming higher just because technology had led us from the bottom there in late August. That did not necessarily mean that just because we had a sharp move higher that we were just going to turn around and collapse. Instead, I submitted the notion that we could just kind of go dead in technology, as many of those names took a breather, took a pause, and meanwhile the capital was seeking return in other areas. In other words, we would see a sector rotation away from the leaders and towards the laggers, which again is much more of a sign of a healthy market rather than what we saw earlier in the summer, where we kind of had a risk-on period for a week and a half or 2 weeks, and then that would just completely reverse, and we would have this risk-off period where everything would look like we were going to hell in a handbasket. And to give you an idea of what I'm talking about, let's take a look at the steel sector. I mean, the steels have pretty much been written off this summer as dead money or underperforming laggards. And you can see here that while technology over the past few days, the likes of Apple and a bunch of other names have come in and have taken some well-needed breathers here, the steels have actually started to break out here above this major resistance that turned the steels away throughout the summer. Excuse me. Instead, you saw the steels start to catch a bid here. In addition, throughout the summer, they made a series of higher lows. So steels are an area that's an area that started to attract capital. In general, the energy sector, denoted here by the XLE ETF, again, same thing as the steels. While technology and many other of those extended areas of the market took a breather the past few days, the energy sector, the XLE, caught a nice bid here, and we're starting to move out. Indeed, in my portfolio, I am overweight the energy sector. You can see that on my blog. My two positions are ATPG and CRZO, both energy-related names. So I think you're starting to see that sector rotation finally come to fruition here. And as we look at another leader here, not in the technology sector, but Freeport-McMoRan, a name you know I love to talk about here. Again, this is a leader that keeps screaming higher, but what you need to know is really this on the weekly time frame, it's breaking out here, and it looks good.